Why India's silver crash will happen again. What if I told you that one of the oldest stores of value in human civilization, one of the metals worshipped by kings, traded by empires, and treasured by billions, is about to fall, again, and that the signs were written centuries ago? We all talk about market cycles. Booms, busts, bubbles, crashes. But silver, especially in India, doesn't move like a normal commodity. It behaves like a mirror reflecting the psychology of a nation. And every time that psychology bends, silver shatters. Because India's silver crashes aren't random. They follow a repeating sequence, an ancient loop of cultural demand, political shock, monetary manipulation, and global economic tension. And history shows that when certain conditions align, India's silver price collapses. And those exact conditions are returning right now. Today we uncover why India's silver crash will happen again, why it is mathematically inevitable, and how the past 800 years of Indian history quietly spell out the next catastrophic correction. This is World Financial Mysteries. And today, we're diving into the forgotten logic behind India's most unpredictable metal. Silver, India, and an unbroken relationship. Before we predict the future, we must understand the weight of the past. India has always been one of the world's largest consumers of silver. Long before the stock markets existed, silver was the backbone of ancient Indian finance. It wasn't just jewelry. It wasn't just dowry wealth. It was money. The silver rupee, first formalized under Sher Shah Suri in the 1500s, became the longest-standing currency in South Asia's recorded history. But the story begins even earlier. The historical systems that controlled silver. 1. Mughal era 1526 to 1857. Silver became the core currency. Taxation, trade, military salaries, all ran on silver. Demand was constant, predictable, cultural, and financial. 2. Colonial disruption 1750 to 1900. The British destabilized India's silver supply chain. Global gold-silver ratios collapsed. India faced its first modern silver crash. 3. The independence era and economic reforms, 1947 to 1991. Industrialization changed silver usage. Wealth storage shifted from silver to gold. Crashes became more frequent. 4. Modern India, 1991 to 2025. Markets opened. Trading volumes spiked. Silver became a speculative playground. Across 800 years, silver wasn't just a metal. It was a financial character reacting to the pressures of empires, trade policies, and currency shifts. And every major crash followed predictable signals, which we will explore shortly. But first, how did the cycle begin? The first silver crash. To understand why the next crash is coming, we must revisit the very first one. The earliest recorded silver market collapse impacting India happened in the late 1800s. Here's how. 1. The global silver demonization. When the United States and European powers demonetized silver in favor of gold, global silver prices plummeted. 2. India's rupee panic. The Indian rupee, backed almost entirely by silver, suddenly lost purchasing power. 3. Imports surged, confidence died. India imported cheap silver at record volumes, thinking it was a bargain. But oversupply destroyed value even faster. The result? The rupee crashed. Wages crashed. The agricultural economy trembled. And from that moment on, silver in India became highly vulnerable to global forces. The first crash created the template that every future crash followed. Silver's cultural and economic explosion. Despite repeated collapses, silver always bounced back. Why? Because India's connection to silver is not just financial. It's cultural, religious, traditional, and generational. Let's break this down. 1. Weddings and rituals. Silver is essential in Hindu, Jain, and Sikh ceremonies. It appears in gifts, utensils, ornaments, religious icons. This creates inelastic demand, the kind that persists even when prices rise. 2. Rural wealth preservation. In many regions, silver is the preferred form of savings. It is portable, divisible, and considered auspicious. 3. Industrial growth. Electronics, solar panels, medical equipment, all rely on silver. As India industrialized, consumption surged. 4. The investors. From the 1990s onward, silver became part of commodity trading, derivative markets, ETFs and global speculation. Demand skyrocketed. The result? A historical pattern of price surges. Every time India's cultural demand aligned with global scarcity, silver soared. But every time global conditions reversed, silver crashed violently. This rise and fall pattern created the illusion that silver is unstable. It isn't instability. It is predictability hidden in chaos. Because each time the same triggers appear. The breaking point, when the crash always happens. Now we reach the core of the mystery. What actually causes India's silver crashes? After analyzing centuries of history, economists point to 5 repeating triggers. The silver-gold ratio collapse. India is more emotionally attached to gold. When gold becomes relatively cheaper compared to silver, India switches. Silver demand vanishes. Prices crash. This has happened repeatedly. 1870s, 1920s, 1980s, 2013, 2020 to 2022 micro-corrections. And the ratio is tightening again. Trigger 2, import gluts. When global silver prices drop, India imports aggressively. This floods the domestic market. Oversupply, panic selling, crash. This cycle is already visible in India's recent import numbers. Trigger 3, currency fluctuations. When the Indian rupee weakens, silver becomes more expensive in rupee terms. Domestic buyers retreat. Prices collapse due to low demand. Rupee volatility is rising again. Trigger 4, government policy shifts. Tax changes, import duties and restrictions can trigger immediate price collapses. Examples include 1960s silver controls, 1996 to 2000 restrictions, 2011 to 2014 duty adjustments. India's government is considering new commodity taxation reforms today, another warning signal. Trigger 5, speculative excesses. High leverage in MCX futures, global ETFs, institutional holdings. Creates sudden liquidations. This was one of the main causes of silver's collapse in 2011 globally, and it affected India more than any other market. What happens after each crash? Every silver crash in India causes 3 forms of damage. 1. Cultural shock. Households that bought silver during a peak face steep loss. Many never recover their investment. 2. Industrial slowdown. Manufacturers pause production. Exports fall. Small businesses suffer. 3. Market distrust. Investors flee to real estate, gold. Silver enters a long winter before bouncing back. But here is the most shocking pattern. Each recovery creates the next crash. By reigniting demand, imports, and speculation, India builds its own next destruction. Why India can't stop the crash? India has tried. Import controls, tariff adjustments, market reforms, standardization, government-backed bullion exchange initiatives. None of these solve the problem. Why? Because the crash isn't caused by policy. It is caused by behavior. Indian households buy silver emotionally. Traders buy silver aggressively. Speculators leverage silver dangerously. And global markets move silver unpredictably. Silver isn't a commodity in India. It's a cultural reflex mixed with speculative greed. That's why no fix has ever worked. And why the next crash cannot be stopped. Modern parallels. Why another crash is already forming. Now we finally arrive at today. Here are the modern conditions signaling another crash. Parallel 1. Rising gold preference. Gold imports in India are surging again. When gold demand rises, silver demand historically collapses. Parallel 2. Rupee volatility. The rupee is weakening. This makes silver artificially expensive and reduces demand. Parallel 3. High import volumes. India imported multi-year highs of silver recently, especially during periods of global price dips. Oversupply is building. Crash conditions are forming. Parallel 4. Increased speculation. MCX silver mini volumes have soared. Retail investors are aggressively leveraged. The same pattern occurred before the 2008 crash, 2011 crash, 2020 crash, and each time heavy leverage was the spark. Parallel 5. Global silver surplus. Silver production is increasing again. Demand from electronics and photovoltaics is slowing. The global market is edging towards surplus. When silver surpluses form globally, India experiences violent corrections. India's silver crash is not a question of if. It is a question of when. Because the same 5 conditions that triggered every historical crash are all aligning right now. 3 takeaways for the viewer. 1. Silver's crashes follow a predictable cycle. They are not random. They recur due to cultural, economic, and global forces. 2. India's silver market is more emotional than logical. Demand is tied to rituals, weddings, tradition, and social expectations, making boom-bust cycles inevitable. 3. The next crash is already forming. Imports, speculation, currency volatility, and gold preference are signaling an impending correction. If history has taught us anything, it's this. When a nation's wealth is tied to tradition, and tradition meets global volatility, crashes become cycles, not accidents. India's silver story is not ending. It's repeating. The past 800 years are warning the next generation. Yet the cycle continues. Will India finally break its silver addiction? Or is the next crash already written? Only time and history will decide. If you want to uncover the hidden patterns, forgotten forces, and financial mysteries shaping our world, subscribe to World Financial Mysteries. Because the next economic disaster is never new. It is always a chapter we ignored. Like, subscribe, and turn on notifications so you don't miss the next episode.